Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Monday, October 16th, 2006. The market's just closed, and we're going to start out looking at the mid-cap spiders once again, the MDY. And what can you say except the market continues to act very strong, and it continues to frustrate the bears out there. The market broke out past this level. I think again, just to recap that 200-day moving average, we tested it a couple times last week, and then it's been off to the races, taking out the early July highs and also those late May level right in here. Now today, where we're at is putting us in continued higher ground as far as since May of this year or so, but we're looking very strong, and the weekly time frame definitely changed last week. I think I made that clear this weekend by taking out that level, and even better by taking out that level there. But it looks like maybe we're heading for a test of the highs. Now, before we start looking for that, though, of course we've got to take into consideration how much risk there is in such a play. And obviously, this market is getting more extended each day. An extended market doesn't mean it's necessarily going to go down the next day or the day after that. But what it does mean is that we just have to be more diligent about assessing risk and setting our stops to make sure that, when and if a sell-off comes, it might be quick. It might also be motivated by a reaction to an earnings report. So just keep your stops in place, and also always know when the company that you're trading is due to report earnings. Looking at the 10-minute chart though of these mid caps, we've got the short-term moving average above the intermediate, above the longer term. They're all heading higher. There's no reason to think that this trend is going to stop anytime soon. The evidence just isn't there. We can see this nice little series of higher highs and higher lows, right into the close today. I think right now that, looking for, 143 is a potential support level down near 142. But a pullback, we are getting more extended. So, we might even come back later this week or early next week down towards this level here that we broke out past from last weekend. But there's really, no good low risk trades setting up in these indices like the spider right here, the SPY. The market just continues to grind higher here, slow, steady grind higher. Looking at a 10-minute chart here, same thing as the mid caps, just higher highs and higher lows. So no reason to be shorting into this. If you are, you're fighting the trend, and people who fight the trend typically experience large losses before they're finally right. You might want to keep an eye on a trend line like this, looking at a 5-minute chart. This might lead to a little bit of profit taking, tomorrow or the next day if we start to see this level here taken out. And this is at about 136.75 or so. We've got that trend line. We've got this little resistance level. So below 136.75, I would say tighten up your stops, get a little bit more aggressive about taking those profits. But again, no reason to think that there's any reason to rush out and sell short or anything of that magnitude. So the Semiconductors, SMH here, again, these guys broke out past the 200-day moving average last week. They were the last what I consider to be major significant group to break past that level. And I think that we're probably going to see a pullback and test of that 200-day moving average sometime probably in the next week to 2 weeks, week and a half probably. But again, looking at the 10-minute time frame, this is showing a little bit less strength than the rest of the market. It did make a slightly lower low here on the short term. If we look at a 5-minute time frame, that becomes a little bit clearer. So that after a lower high. So the semiconductors tell us, hey, maybe we're going to get that test down towards 35 and a half. If 35 and a half fails, what the heck kind of trend line is that? 35 and a half here. That's what I meant to draw. And if the 35 and a half fails to hold, then I would probably say look for about $35 a share. The Qs, Nasdaq 100 Trust. Same thing here, starting to show maybe a little bit signs of getting tired here on the 5-minute time frame. This 42.25 level, let's just call it 42.20, breaking below 42. Well, I don't even want to say 42. I guess 42.20, 42.15, 42.20. What am I looking at here anyways? That 42.15, 42.20 is way down here. 42.40 to 42.35. Breaking below there would probably see us start to pull back a little bit, and maybe we're going to pull back down towards 42 bucks a share. We'll see tomorrow.